Hello, friends. I am Debbie Taylor, Chief Tax Strategist and Managing Partner of Carson Wealth. And I'm here to talk to you about something that could feel a little bit uncomfortable, but it is a topic that all of us probably will address in some form or another at some point in our life. So the question posed to me today is, what's something that widows wish they would have known ahead of time? And whether you will find yourself in this situation someday, or maybe a loved one or a neighbor or a friend, most of us are dealing with this at some point, right? For ourselves or on behalf of somebody else. So this is a good question for us to ask. And I'm going to go through then 5 things that we wish everybody would know ahead of time, right? So the first thing is, there is a big tax shock after the loss of a loved one. Going from married filing joint to single can increase your tax rate by 10% on the margin and cost you a great deal of money, literally the next calendar year. The tax code is very punishing to single people at times, and definitely to widows who will have the income of the couple, but then they will be the survivor filing single. Now, it's true that one of the Social Securities is given up, and the surviving partner will step into the higher Social Security amount. So technically then, there could be slightly less money, at least in those first couple of years. But other than that, for the most part, the surviving partner is stepping into more or less the same amount of income that the couple had, but now the surviving partner is filing single. And for the most part then, filing single is at half of those tax brackets, the AGI number, the taxable income number, and therefore the tax rates typically go up rather significantly. And that also includes Medicare IRMA surcharges will often stay the same when, again, you're going from married filing joint to single. So even though there's only one person now getting Medicare, that surviving partner is often paying the same or very close to what the couple was paying when they were both alive, believe it or not. Number 2, we need to know where everything is. And now in this age of digital everything, it's not just now paper copies, but it's also what's online, what passwords are there in the ether, and we need to have an inventory. And we need to do that inventory when we are alive and when we are well. So whether we have paper copies of things, digital copies, and it's probably a combination, both partners should have access to passwords, know where everything is, have an inventory. Let's take stock before it's too late. Third, let's have these what-if conversations, right? Let's understand life insurance. Let's understand beneficiaries, designations, the types of pensions, the choices we've made, right? Let's have these conversations again when we're together, when we're healthy, when we understand what those choices are and who to be going to for next steps when we need to do that. Fourth, let's understand the inherited account options in connection with IRAs. So if the deceased partner has an IRA, then the surviving spouse has a number of options, and it is very complicated. And the rules matter because there's no do-overs in many instances, and it depends on the surviving partner's needs. Will you need cash flow from the IRA? Are you under 59 and a half as a widow? Would you prefer that IRA be in your own name, but you don't need the money for many years, right? So there's all these ins and outs. Did the deceased partner, was that person possibly younger? And then it would make sense for the surviving partner to step into the deceased younger partner's shoes, right? So there's all these permutations. They're trying to create options for the surviving partner, which is a good thing, but the options can be dizzying. And so you need to be with an advisor who really understands then how to navigate this area. And then the final point, which I'm leading into, is you need a trusted team that you can count on. And ideally that trusted team is in place before anything happens. They talk about how emotional it is, how difficult it is when you're a surviving partner or when you are widowed. And then to add on top of that, having to hire a brand new team can feel just emotionally overwhelming. And then you could miss things, right? You may need to file to preserve portability. That's an estate tax return, right? There are a number of time-sensitive things that need to be done. You might need to be doing Roth conversions that first year. Even before you become widowed, while you're still married, filing joint so that you can take advantage of that wider tax bracket, right? So there are things that need to be done even before you become widowed that if you have a trusted team, they're going to be there to coach you. So I know I covered a lot here, but hopefully you understand. If you have any questions, please feel free to call us or reach out. Again, Debbie Taylor at Carson Wealth, Franklin Lakes, and thank you for listening. We're here to help.